With all the casinos closed for the past year, sometimes I just feel like gambling a little bit on the stock market. And it's not just any type of gambling, it's mindful day trading. I didn't look at moving averages, support resistance lines, Bollinger Bands, whatever. I traded based on momentum. Well, this was an interesting play I made last month on EHang. This is a stock that I never planned to own for the long term. But for the short term, for the day trade, why not? I saw an opportunity and I just wanted to capitalize on it. Here's a little context. On February 16th, there was a short report from Wolfpack, pretty much calling BS on their business, saying their factory is pretty much an empty piece of land and there's no business operations. And on the day of February 16th, this happened to the stock. So if we rewind to February 16th, we started off the day at $123. And the lowest it went was $46. So that's pretty much a 63% drop for that one day. And what my play was for the very next day, it was called a dead cat bounce. Whenever we get a stock price that gets trashed by like 50%, 60%, this instance is 63%, it's bound to bounce back. It may not be the very next day, but possibly within a 2-3 day time frame, within the same week, it can bounce back. And how much can it bounce back? The retracement could be about 50%. So if we have 123 over here and 46 down here, the bounce back should be around $80. And this was the play I made. So the next morning, 6:30 a.m., I was watching the stock like a hawk. Exactly what happened here is that on February 17th, we started off the day with a quick bounce. With a quick bounce from $46 all the way to $67 within the first 20 minutes of trading day. And I didn't just blindly buy into the stock. I initiated my position when it showed some momentum. So the stock EH was actually on the trending page within the first 10-15 minutes. So I had to go in. And right here is my trade. 9:46 a.m. So around 15-16 minute mark, I bought 200 shares at $60.28. So that was somewhere here. And once I got into the position, I had to set a stop loss and a profit take. So as you can see here, I set different milestones. I set different milestones for the profit take. I set it at 70, 80, 90, 100 at these 4 increments. I had to set up these profit take tranches because anything can happen. And we've seen the short squeezes for GameStop. This was kind of a replica for me. And this is why I entered this position, because all the GameStop short squeezes that happened over the past 2 months. If there's a shorting report, then we can potentially get these Wall Street bet guys to squeeze it all the way back up past $100. That's why I set it at 70, 80, 90, 100. But the mindset is that even if it doesn't hit any of these marks, I still have to close my position for that day. That's the pure definition of day trading. We can't leave our positions overnight because we know that anything can happen overnight. That's the mindset of not getting handcuffed. So if you look back here on the 17th, our lows for that day was 48 and the high was 75. And I closed all my positions within that day. Because if we didn't close a position for that day, we would have been handcuffed. We would have been handcuffed at these $60, $70 range, and ultimately it continues spiraling down to $35. So our speculative play was only for that day. I didn't want to speculate more than one day on this stock that I never planned to hold. So this whole play kind of replicated a dead cat bounce to the T. So we have 123 here, 46 here, bounced back halfway, close to $75, $80 mark, and went straight back down to break the previous low at $44 here, and it kept going down to like $35 until the next bounce. But we didn't care. We didn't care about anything after this ride back up. All of this means nothing to us because our play was a day trade. And on the other side of the coin, there's a stop loss. Pretty much right after I bought it at $60, it continues shooting up to $70, $75. So the stop loss, I set it at $60. As we can see here on the trade, my profit take for the $75 50 shares was executed pretty much 20 minutes after. And I sold another 50 at $66 because I saw it waver and it went all the way back to 63. I'm like, there may not be any gas in the tank, so I took some more profit then. And as I always say, it's never wrong to take profits. So the remaining 100, I kind of sold near the end of the day because, as I said before, I didn't want to carry the trade through the next day. So I had to end everything. The rest of it I sold at $73 and $75. My total investment was $12K and my total profit was $2K. So that's about 17% in a couple hours. Overall, I'm happy with the play. Could I have made a lot more if I sold at the top and bought at the bottom? Yes. But hindsight is 2020. I didn't know the low was at $46 and the high for that day was like $79. So 46 to 79. And I bought and sold somewhere in between. My play area was $60 to 75. That was the meat of the fish for me. So that was my thought process behind this momentum play. What do you think about it? Do you set any profit takes or stop losses? It made sense for me because if I set it, then I kind of defined my risk and reward. My stop loss was at $60. So essentially my risk is kind of nothing, because I already taken profits at $70 for the 50 shares. So any price action that happens for the rest of the day is all gravy. Like, isn't that Warren Buffett's #1 rule? Never lose money? As always, thanks for watching, take care, and I'll see you in the next one.